Hey, good morning, everyone. Welcome. It is August 17th. August 17th. It is Thursday today. Hope everyone is having a great time. And the week's almost over. We had a more downside yesterday into the close, right? A lot of bearish activity and bearish momentum with bearish order flow coming up. So far today, off the lows on the S&P 500, we have a pretty significant rally, about 25 handles or so off of that 4410 region overnight. Little relief rally. We'll see where that takes us. I'll talk a little more about that trading plan at the end of this session. But also, let's talk about bond yields. Bond yields have continuously run up, right? There's a rise across the board, continuing a large upswing that began about 3 months ago at the beginning of the summer. So, in fact, the yield on the benchmark 10-year, the US 10-year closed at 4.25 on Wednesday, making it the highest level since 2008. And the extended gains overnight, they rose another 4 bips up to 4.29%. The upward march follows the release of the latest data from the FOMC meeting minutes, which stress that there's additional rate hikes that could be needed. So, in terms of the minutes, with inflation still well above the committee's longer run goal and the labor market remaining fairly tight, most participants continue to see significant upside risk to inflation, which could require further tightening of monetary policy. So, participants generally noted a high degree of uncertainty regarding the cumulative effects of the economy of the past monetary policy tightening, and emphasize the importance of communicating as clearly as possible about the committee's data dependency and the approach to data dependency to policy and its firm commitment to bringing inflation down to the 2% objective. So investors also sizing up the latest developments of how rising rates compare with stock valuations. While the equity market has had a few hiccups in August, stronger than expected economic data continues to pour in, and buy the dip continues to be the strategy for those that expect the Federal Reserve to end the hiking cycle soon. And others say 10-year yields above the 4% still present a good buying opportunity. And in contrast, the potential reward for pricey stocks and multiples that might not be appealing. So the way I see it is that the bond market, I think, has a little more downside to go before we see any relief bounce. I think that the bond market is nearing very critical mass where the downside is opening up fairly aggressively, and I think there's more to it. I think in the longer run, the bonds do get beat up, but I think relief rallies over the next few months are possible. In terms of stocks, we're getting very oversold for less than a 5% drop in the S&P 500. The NASDAQ down about 7%. I can see the NASDAQ down between 10 and 14% by the end of this little drop here. But I think a lot of these dips are buyable. Every 5% dip, I think, is a decent opportunity for the long term. In terms of swings, we're getting extremely oversold in a lot of breath readings based on just this small little drop. The most oversold we've seen in a very long time, since March, based on some of the readings that I'm looking at. So I think that dips are viable under 4,400 on the S&P. I think 4,300 is probably an ultimate low before we start seeing any of this upside. There could still be a few percent drop, a little relief rally holding out right now. I'm watching to see if that does materialize today, or do we get more of a pop and drop. In some of the other news, we have some crypto derivative news. In the big regulatory win in the battle as the SEC lawsuit, Coinbase has received regulatory approval to offer eligible U.S. customers access to cryptocurrency futures. So Coinbase will now be the first crypto native leader to directly offer traditional spot crypto trading alongside regulated and leveraged crypto futures on the integrated trading solution. So the exchange said in a statement, the development is viewed as a positive for the industry, especially in light of the recent flurry of spot Bitcoin ETF and Ether futures ETF applications. We'll see how that does shape up. We had some more earnings yesterday. I think we had TJX and Target, if I'm not mistaken. So I'm going to take a look at those, because those, again, retail earnings coming out. Pretty important stuff yesterday. TJX reported, I believe, just after the bell, beat and a gap and pop. We also had, what was it? Target, another T. Target, right? Still holding a downside leg. Remember from the last earnings report, after the last earnings report, we got a pretty significant slide after there were notions that a lot of theft had been going on in Target. So retail earnings not that bad this time around, right? We're extremely oversold on Target here as well. But we'll continue the earnings season. I don't think there's too much after Nvidia. Realistically, that's one of the main things that we are looking for. Nvidia in terms of earnings is coming out, I believe, is coming out August 23rd. So that's next week. Nvidia, on a indicator perspective, was extremely oversold actually coming into Monday, right at 406, which is very surprising considering where this stock is. But let's talk about what we have on the S&P 500 futures today. So the S&P 500 futures yesterday, very interesting moves. We were talking about some potential bounces. I was looking for the long side a lot yesterday, and I found some decent bounces, but I missed a lot of that downside leg. Today, what I'm watching around that 32 to 35 area on the S&P, 44, 32, 35 is the first ultimate resistance where sellers would do well to try and hold this thing out, to try and push prices back lower and potentially come into the region of the 22s, 44, 22s and lower. There could be acceptance to the downside realistically if these areas hold. The max area for the bears to actually sustain is between 4442 and 4444. Those two areas, I think, is the final straw for the bears. We're starting to change the structure a little with buyers stepping in and holding out some of these key areas. So buyers to hold 4422, right? They'd want to do that as some kind of higher low, and sellers to hold out 4435 to start off with. So I'm going to be watching those two areas. We're in a pivotal moment right now. We've seen a lot of transitions here, and relief rallies overnight, right? A lot of them get beat up. There's a lot of stuck longs that have accumulated at 36 right now pre-market. So I'm going to be very cautious about this. I think there could still be a few more legs to the downside. So I wouldn't necessarily be surprised to see a pop and drop, maybe a little relief rally today. And I'll be looking at those levels very closely. And we'll talk about trades. We'll call out trades and go from there in our live trading room. So check that out. We're going to be opening it up soon. Good morning, everyone that's welcoming me in the chat. I hope everyone's having a great day. And check out our free futures course on our website. It won't disappoint. And coming up, keep an eye out on those emails. I'm going to drop an announcement either today or tomorrow for people that are on our mailing list, right? And I'll see you guys. I'll do the announcement on YouTube tomorrow as well, but I'll see you guys very soon for something pretty exciting. So thank you all. Enjoy the day. Happy trading. Come and check us out at our trading room, right? You got a 7-day money back guarantee, and you'll see what we're all about. And let's do this again tomorrow to wrap up the week. Take care and thank you, everyone.